Several thousand terrorist fighters have gone to fight in Iraq and Syria over the last few years, and many are returning to their home countries. A key question that we'd like you to consider during this webinar is, do you know if you've ever transacted with any of them, or indeed whether you have any of them as your customers? Financial services really does continue to play a pivotal role in disrupting terrorism financing, along with government and law enforcement agencies, as we know. And naturally, terror attacks by homegrown terror cells or lone actors, like the ones we've seen recently in Europe and elsewhere, have resulted in a heightened sense of awareness of the threat of this new type of terrorism. It also highlights how the nature of terrorism itself has changed since 9/11. Now, without a doubt, the regulatory framework put in place since 9/11 has made it more difficult for terrorists to operate. But the very nature of terrorism has changed so dramatically in recent years, and terrorists have become very good at adapting and finding new ways of both invoking terror and financing it, that the authorities and industry have to remain vigilant and themselves find new ways of thwarting terrorism financing. So let me introduce our speakers for today from Exiger. I'm joined by Brandon Daniels, who's president of Exiger Analytics and an expert in financial services investigations, regulatory matters, and data analytics. He has used his extensive data analytics expertise to expose potential terrorist financing risk in a number of the world's top banks. We're also joined by Dana Borden, who is EMEA Deputy Head of Financial Crime Compliance at Exiger and specializes in AML and CTF investigations and in advising banks on how to enhance their financial crime compliance controls. Finally, we also have Vladimir Petrov, who's an Associate Director in Exiger's Financial Crime Compliance Advisory Practice and who specializes in advising banks on how to enhance their programs. Today's presentation is going to last approximately 45 minutes, followed by 10 to 15 minutes of Q&A. And I'm going to run through the agenda. I'll be covering how terrorists source and move funds, followed by Dana, who's going to be covering the emerging trends that we're seeing and assessing whether the CTF regulatory framework and industry responses have kept up with the evolving threats. Brandon is then going to provide us a practical guide to help you manage terrorist financing risk using a variety of techniques, including the use of data analytics and AI-enabled tools. And finally, Vlad is going to bring all of the strands of our presentation today together to provide an illustrative example of what can be done to detect terrorism financing in your institution. We're going to finish off with a Q&A session, and I would encourage you, if you have a question for any of our presenters today, please type them into the webinar console throughout the presentation. So today's presentation is interactive, and we're going to be seeking your input via a number of poll questions. So with this in mind, and to help set the scene, here's our first poll question of the session. How would you describe the way terrorism financing is prioritized in your organization, ranging from high, medium, and low priority to you not being sure? We've opened the poll, so please could you provide your answers via the webinar console now, and hopefully we'll be able to see the results. And look at that, the results are coming in, and I guess no surprises there that well, that 77% of you consider it to be high priority, and only 6% of you so far are not sure. So that's very encouraging. And given the recent terror attacks in Europe, it's not surprising to see that result. Okay. Moving on, how do terrorists generate their funds? Well, from a diverse range of sources, using a variety of traditional methods as well as emerging technology-enabled methods. Now, understanding these methods will help you identify relevant red flags, some of which are really hard to spot because the activity itself can look completely normal. Traditional sources of terrorist financing have been around for years and still present some risk, although global sanctions efforts have reduced funding from some of these sources. For example, state sponsorship of terrorism, kidnap for ransom, misuse of charitable donations, to name but a few. And in recent years, terrorist groups have also been plundering resources within countries that they've controlled, such as ISIS in Iraq and Syria, raising funds through, for example, taxing the local population, selling plundered oil, and selling smuggled antiquities and cultural artifacts. So what are the newer or emerging sources of terrorism financing? Well, they include raising funds through criminal enterprise, for example, the use of front companies or petty crime, as well as bank fraud, social benefit fraud, to complex VAT fraud, to name but a few. Another form is self-funding, where, for example, individuals who've become radicalized have used their own funds from legitimate sources, such as their own salaries or student loans, to travel to conflict zones. And then an emerging technology-enabled trend involves the use of social media, microfinancing or crowdfunding sites to source funds for terrorism. So moving on, how do terrorists move and store funds? And what products could they use? Understanding this is key to assessing your vulnerability to terrorism financing risk. And when we look at the regulated sector, terrorists around the world have misused a variety of commonly used and available products, employing a range of techniques to both transfer and store their funds through banks and MSBs and potentially even institutions that you work for. These traditional products and services include current accounts and debit cards, bank loans and credit cards, cross-border wires, as well as bank ATM to withdraw cash. MSBs are also particularly at risk here, especially those that are unregulated or operating without appropriate licenses, mainly because they're more likely to lack the appropriate AML and CTF controls. Other methods of moving funds include cash smuggling, which does remain the simplest and oldest way of moving money, as well as hawala networks, which have been around for a long time and can be used to transfer terrorist funds, particularly in those areas where there are limited or no access to international banking. And as AML and CTF regimes become more sophisticated, so too terrorists have tried to find alternative methods outside of the regulated sector. And as Dana and Brandon will cover shortly, these include online and mobile payment platforms that can easily be used in tandem with social media, microfinancing or crowdfunding websites, as well as virtual currencies and prepaid cards, although regulations are tightening up around these particular products. So the key question really remains, how can you increase your chances of identifying terrorist financing risk in your customer book, given the nature of terrorism has changed and the methods employed by terrorists to finance their operations is also evolving? To help answer this question, I'm now going to turn to Dana Borden, who's going to cover emerging trends and the challenges that they present to the financial services sector, how the CTF regulatory regime has evolved, and what financial institutions can do to prevent and detect terrorism financing risk. Dana, over to you.
Thanks, Summer. Before we delve into the next section, we'd like to ask another poll question to understand the focus placed on terrorist financing in your organisation. Please provide your answers via the webinar console. The question is, does your organisation employ anyone dedicated to assessing terrorist financing risk? Okay, we're starting to see the responses coming in. And it's good to see a lot of people do employ someone focused on terrorist financing. Although not as many as we expected, there's still many of you who don't have anyone focused particularly on terrorist financing risk. Okay. Okay, so let's look at maybe why some of you do focus on terrorist financing and why others of you answered that you didn't have anyone particularly dedicated to that area. One of the key challenges for terrorist financing is that it's often not thought of as a unique program. What you tend to see is that terrorist financing is bundled in with AML without real consideration as to how it's different. Terrorist financing is often split across your organisation, so what you may see are multiple teams managing terrorist financing risk. For example, AML teams may look at terrorist financing risk consistent with the regulation. Fraud and FIU teams may investigate terrorist financing, as they're often very good at managing data and typologies. Investigations teams may respond to production orders or requests from law enforcement, and your sanctions teams may manage sanctions and terrorist lists. It is interesting that terrorist financing has not been split out as a unique discipline in the same way we've seen bribery and corruption do recently. Whether it should or shouldn't, well, I guess that depends on your organisation, but there is a risk in the meantime that it doesn't get adequate focus. The recent trend towards microfinance attacks also creates a challenge in identifying terrorist financing. If you look at recent attacks, you'll appreciate it's very difficult to detect small transactions, such as things like hiring a van or the purchase of chemicals to make a bomb. Identifying small-scale terrorism becomes especially difficult when the act of terrorism is funded through legitimate sources, such as through benefits payments, salary, or even student loans. These funding methods don't require large movements of illegal cash like we see with money laundering. The recent trend towards small-scale terrorist attacks also means that many potential suspects could be flagged as low-risk customers. Many suspects are now radicalised in-country, and their financial profile may not flag on your traditional monitoring systems. Finally, given how serious an act of terrorism can be, it is important to consider how time-sensitive it is to identify individuals or transactions linked to terror. Given how serious terrorism is, it's fair to say that regulators globally recognise how important it is for banks and financial institutions to have strong controls in place to prevent and detect terrorist financing. While we can't look at all the regulation, we wanted to highlight how difficult it is for regulation to put in place measures that are appropriate but actually capture small-scale terrorists. What you tend to see is that much of the response to terrorist financing relies on AML regulation, so you see them stuck together as AML CTF. For example, while there have been changes in Europe to focus on specific typologies, such as things like prepaid cards, the recent Forced Money Laundering Directive also dropped the threshold for reporting of transactions. However, it's quite unlikely that that will be small enough to capture terrorism. Even some of the measures born out of the 9/11 attacks, such as terrorist financing tracking program, are unlikely to capture small-scale domestic terrorists. And finally, it's worth mentioning that as technology and payment methods evolve, regulators have to move quickly to fill the gaps to ensure that new payment methods are in fact regulated. So given these challenges we've outlined, it's probably a good time to explore the ways that you can in fact find the needle in the haystack. But before we do that, let's take another poll question. In the same way as last time, please provide your answer via the webinar console. The question is, does your organisation use data analysis and intelligence to act as an early warning system to flag accounts with potential terrorist financing risk? Okay, we're getting a lot of responses in. And again, it's good to see that many of you recognise that using data and intelligence is an effective way to identify terrorism. Okay. Please keep providing the responses. It's starting to swing a little bit back towards no and not sure. Okay, last opportunity to respond. Great. So many of you do use data analysis and intelligence to act as a warning system and to identify terrorists. But let's look at how you might be doing that for those of you that answered no or not sure. In this section, we would like to look at ways you can get data to help build typologies and identify potential red flags, which I'll touch on in a minute. One of the first ways to get data is to look at what you hold within the organisation. Often there is good data, such as accounts that have been subject to inquiry or production orders, or other tools such as negative news screening that can be leveraged for terrorist financing. Another important data point can be found in the KYC information held on the client profile and in their transaction history. Often this information may contain behavioural red flags that warrant further investigation. The investigations process can also be a very important tool to help you understand new typologies. And it's important that when you do investigations, you take those learnings and apply them to potential suspects further down the line, and that you also assess those individuals to understand the networks that they may be operating in and how that information might be relevant for law enforcement. Finally, performing meaningful data analysis can help narrow down large populations of clients into smaller, more manageable groups that display multiple red flags that warrant investigation. Okay. So for the purpose of the presentation, I'll go through some examples of behavioural and transactional red flags. I will stress these are generic examples, and the specific red flags that we look for can be much, much more refined. On the behavioural side, things to look out for include customers that link to high-risk countries and those that are on known sanctions or terrorist lists. It's probably worth noting that there are many lists out there that are not mandatory for screening. Other behaviours might be things like the use of fraudulent IDs or even large periods of dormancy following travel to high-risk countries where you notice things like the customer might stop receiving their income or salary payments. On the transactional side, you might see transactions that are not consistent with the KYC profile of the client. Those payments may themselves actually contain suspicious references mentioning extremist activities. Other potential red flags could include things like ATM withdrawals at known border crossings, along with or combined with things like purchases of sport and camping equipment that might be useful in terror zones. Finally, you may see things like donations to charities that are reported to support extremist activities. So I hope you can see that there's a lot of data that you can look out for, and these are just examples. I will hand back to Summer now to introduce my colleague Brandon, who can explore that further.
Great, thanks, Dana. I'm now going to turn it over to Brandon, who's going to talk about how technology can play a key role in fighting terrorist financing using the power of data analytics and AI-enabled tools to help you identify those behavioral and transactional patterns that Dana talked about just now, and to help you zoom in on potential terrorist financing risk in your customer base. Brandon, over to you.
Thank you, Summer, and thank you, Dana. In the fight against terror, technology is often a double-edged sword. It has enabled rampant online radicalization and fundraising with limited controls. As well, much of our public infrastructure is technology-driven. It also gives way to cyber attacks and latent dark web communications. However, technology is one of the most powerful tools in the fight against in the fight against terror. Under initiatives led by organizations like the UN Counterterrorism Committee, tech companies such as Google, Facebook, Microsoft, and Twitter have banded together in the fight against terrorism. Using cutting-edge artificial intelligence to identify and expose terror-related communications, transactions, and social media, they are actually turning the tables on terrorist organizations. Post 9/11, traditional terrorist organizations were fragmented due to the international war on terror. The targeting of state-sponsored terrorism and unilateral strategic terror led to the decentralization of terrorism and disassembled unified hierarchical organizations. As mentioned previously, this has been fueled by technology, enabling individual online radicalization, recruitment, training, and financing. This change in model has led to more elusive methods for financing these smaller and more targeted attacks. Simultaneously, the payment services market, crowdfunding, crowd investing, and peer-to-peer lending markets have opened up affordable but difficult to regulate financial services to hundreds of millions of customers. The salutary trend is set to grow as directives such as PSD2 open up this market. These two trends, decentralization of terrorism and financial services, together create both challenges and opportunities for the rapid and accurate identification of potential terrorist financing. Now, although more dispersed, most terrorist activity leaves a data footprint. This is an opportunity. For instance, with Ahmed Khan Ramahi, the alleged perpetrator of the 2016 bombings in New York and New Jersey, his activities, such as the purchasing of bomb-making materials, were all recorded online as he purchased from sites like eBay circuit boards, electric igniters, and ball bearings. With a deluge of data, information sharing across financial services providers and law enforcement bodies, combined with data analytics to analyze the billions of data points that exist in any financial transaction universe, can help to exploit the insights embedded in this data in the fight against terror. Next slide, please. All of the key red flags that Dana mentioned have one common thread. They are all data points that are generated in massive volumes. This provides your organization with a phenomenal opportunity. You have the ability to evidence multiple behaviors that connote problematic accounts, customers, or activities related to terrorist financing. But it also poses a challenge in scale and complexity. Without an understanding of which data points are material to terrorist financing, you can be buried in false positives. Next slide, please. When combined or analyzed through the use of simple algorithms, analytics can pinpoint in potential investigation targets for the subject matter experts on your team. For instance, as mentioned above, you can have multiple indicators of problematic behavior, but those indicators occur at such scale that investigating all of them would be near to impossible. For instance, one of the indicators that we mentioned before is that you can identify accounts transacting in countries other than your place of residence or in high-risk jurisdictions. But in many banks, you can have north of hundreds of thousands or millions of accounts that are transacting in said countries. You can also have things like accounts with high-frequency deposits and ATM withdrawals, accounts that demonstrate online crowdfunding activity from credit cards, and accounts that also hit on points from your transaction monitoring system, like peak credit and debit activity over the course of a year. And all of these individually may be meaningless, but when combined, can lead you to critical investigation targets. Another area that people often struggle with when it comes to data analytics in counterterrorist financing is the area of statistical analysis or artificial intelligence. When thinking about statistical analysis and artificial intelligence, it's not always Star Trek level technology that gets you there. Even a simple word frequency analysis in payment references may flag latent issues. As seen in the diagram on the PowerPoint, even just looking at the frequency or anomalies in word frequency in payments can highlight issues for you, where people have put latent references to their activities into the payment reference information. Also, a slightly more complex algorithm can dynamically spot outliers in similar customer profiles. So where you have these retail customers with small, almost undetectable activity, when you put them together and you look at changes in behavior, outliers can better identify potential investigation targets for you. Next slide, please. Moving on from data analytics and statistical analysis, there's one additional weapon that you have in the fight against terrorist financing, and that's artificial intelligence. Artificial intelligence promises to transform financial crime and terrorism investigations in two key ways. One, reducing laborious tasks, and two, exposing latent and complex connections in data sets that are too large to analyze consistently with people. As an example of how AI is reducing risk by automating highly manual and laborious tasks, many large banks would like to move certain customers and jurisdictions to continuous monitoring of adverse media and KYC information changes. However, this is a major challenge, potentially impacting staffing requirements, costs, and program changes. Factors such as duplicative media and a large volume of false positives can be major barriers to implementation of continuous monitoring of certain customers or accounts. However, AI can play a role in simplifying this continuous monitoring exercise. Through sampling and iterative learning exercises, AI can learn your decision-making process and automatically and consistently dedupe content, eliminate false positives, and risk rate KYC information changes. This allows you to not only be more comprehensive in your identification of risk, but it also allows you to accelerate and to be more cost efficient in that same identification. Second, as mentioned, a cohesive single view of the customer driven by analytics and validated by humans means that you don't necessarily have to know the typology that you're looking for. You can feed the system on an ongoing and iterative basis information that allows the system to identify what you find important when analyzing potential terrorist financing schemes. These technologies can pull together things like network analysis, your underlying KYC customer data, your transaction monitoring alerts, geographic details of customers, and can find similarities, points of novelty, or anomalies to inform you as to what factors are important for finding potentially problematic behavior. Data analytics represents a key tool in fighting terrorists and terrorism in the 21st century. And with that, I will pass it back to Summer.
Great, thanks, Brandon. We're now going to hear from Vlad, who's going to talk us through an illustrative example that will hopefully bring together the various strands of today's presentation and demonstrate how powerful data analytics can be in identifying terrorist financing in your institution. So, Vlad, over to you.
Thank you, Summer. What I want to show with this scenario is how these techniques that we've discussed can work in practice. This is an illustrative scenario to bring to life how I may work in a financial institution with retail clients. It's not based on any specific event, but it broadly follows the typology that we've seen in the last few years with British-born individuals going overseas to fight for ISIS in Syria. So on the left-hand side of the slide, we have the client behavior that we're interested in, and on the right-hand side, we see how this behavior manifests itself in the data that's collected by our institution. So let's suppose that our client is British and has lived in the UK their whole life. Let's say they opened an account when they were a student and that our client now works part-time in retail. Now, as Dana mentioned earlier, using any classic risk scoring methodology, our client will fall squarely in the low-risk category of clients, and therefore he's unlikely to be relationship managed. However, our client then begins to travel to high-risk locations. How will we know that? Well, you would see tickets purchased with airlines that fly to those locations on his account. You would also possibly see transactions in those locations. Now let's go one step further and say that after traveling to these high-risk locations, our customer decides to relocate to Syria. What you are likely to see is a drastic change in their transactional patterns. What you tend to see is a large cash withdrawal in the UK before he flies out to Turkey, followed by transactions in Istanbul, let's say, and then again, perhaps in a small town close to the border with Syria. This is because they know that once they cross the border into Syria, you know, the formal financial system is closed off to them. Then let's suppose our client, being a young and tech-savvy millennial, looks to use innovative ways to move funds outside of the formal financial system. You may begin to see a volume of transactions from companies who operate Bitcoin exchanges. Finally, your institution receives a production order. The production order relates to a different customer. However, when you look into that customer, you find out that one of their order addresses matches to the customer that we've been talking about. Hopefully, you're beginning to see that all of these behaviors manifest in specific ways in the client's data footprint, and that on their own, they may not necessarily set off alarms. However, when you take them together, they paint a picture that suggests our client's risk profile has changed. So how do we identify these patterns in the data and, most crucially, link them together in a meaningful way? This next slide discusses exactly that. The good news is that most institutions already have so much data to look through, and the systems that can be tuned to look for these patterns. The key factor is really layering the information, linking multiple red flags together to narrow it down to a small group of clients that warrant the attention of your skilled staff. For example, if you have a client who travels a lot to high-risk jurisdictions, you may be able to identify them through transaction monitoring. Now, your client might be traveling to high-risk countries all of a sudden because they've changed jobs and perhaps they're airline crew now. So it could be a red flag, but if we look at it in isolation, it may give you hundreds, if not thousands, of potential leads. So what we need to do is we layer on clients who have transactional pattern changes. This can also be picked up by transaction monitoring if your system is tuned to look for it. For example, clients with cash transactions close to borders with sanctioned countries, followed by periods of inactivity, would be a red flag. Using that, we will get a much narrower group of customers to look at. What if we also use the data your institution holds on SARS? We could see if the addresses or telephone numbers of SARS customers match to any other clients. This would also be a red flag. We can also look at which clients in our book have transacted with subjects who are the subject of reduction orders. Customers who have 3 or 4 of these red flags would be very few and would definitely warrant a targeted investigation. I guess one final thought is, an important thing to note is that institutions have to keep on top of current typologies for terrorist financing. For example, as ISIS loses ground in the Middle East, we have a conflict flaring up in the Philippines. So in a year or two, you may be looking for the cash transaction in Mindanao rather than the cash transaction on the Turkish border. So with that final thought, I'll hand back over to you, Summer.
Great, thanks very much, Vlad. So we're nearing the end of our presentation, so I'm going to be leaving you with our 3 top takeaways. Firstly, given the changing face of terrorism and the nature of the emerging threats, it's vital that, as Vlad was saying, you monitor for new typologies on a risk basis so that you can assess your program's vulnerability to these evolving risks and take corrective action where required. Secondly, ensure that your transaction monitoring systems have appropriate detection scenarios in place that are configured and tuned and to pick up on the relevant red flags that they are able to detect. And finally, where your TM systems perhaps fall short, explore the power of data analytics and AI-enabled tools. Terrorist financing has, as you've heard, has become, and you probably know, has become increasingly complex, decentralized and technology-enabled. And to help you neutralize this threat at scale, a sustainable CTF program really does need to employ data analytics and AI-enabled technology to spot vulnerabilities, latent trends, as well as behavioral red flags. So that brings us to the end of our presentation. And I'm now going to move to Q&A. And we've been receiving a flurry of questions, so thank you all very much for sending them through. I think you've sent us far more questions that we're going to have time to answer. So for those of you who haven't asked a question, please type them into the webinar interface. And just reading through the ones that we have received, here's one that I think, Dana, you may be able to field. The first question is, how often should institutions monitor for new typologies and terrorist financing risk?
Thanks, Summer. I guess that really depends on your risk assessment and the profile of your organisation. And I appreciate sometimes it's difficult to get into the specifics when many of you do come from different types of organisations and do have different customer bases and products. Really, you should be performing at minimum annually a risk assessment And that risk assessment should capture terrorist financing risk. It should look for things like what kind of customer base you have and how that's potentially at risk for terrorist financing, the products that you supply and how those products themselves could be used for terrorist financing, the geography that you operate in, and your transaction flows, for example. And putting that information together, you'll understand how risky your organisation is, and that should lead you to ask questions about how often you should be monitoring and what type of monitoring you should be using. Look, I think if you had, for example, a large retail book that operated globally and, in many higher risk jurisdictions, as indicated by your risk assessment, it's possible that you could do things like monitor daily, in the same way that you see things like transaction monitoring or negative news screening happening daily. And some of the things that Brendan pointed out with AI and data analytics actually can allow you to do that, and do that to narrow down quite large populations into smaller, more manageable groups that you could then look at to determine if you actually do have risk. In other cases, I suppose it's not going to be practical to do that. You would potentially look at typologies on an ad hoc basis, or if you are alerted to the fact that you do hold accounts for a terrorist suspect, or it's flagged through your networks of colleagues when they identify a particular case, you may want to look at those typologies and do an assessment of that. So I suppose the answer to the question is it depends, but it very much, you should look at the risk of your particular organisation and see how often you should monitor.
Great, thanks very much, Dana, and thank you for whoever asked that question. Just going through the list now, and there are so many here. I'm going to turn to Brandon with this one, I think. Brandon, the question is, what are some of the challenges that banks commonly face when executing data analytics in the CTF space? Are you okay to take that, please?
Of course, yes. So there are two things that I see very often. The first is the challenge of finding reliable and clean data, right? So as a major barrier to conducting analytics is having uniform and clean information to run analytics against. And so the normalization and the cleanliness of information stands as a major barrier to many organizations using the power of analytics and artificial intelligence in the execution of CTF. Now, the other thing that we often see is the lack of sort of combined expertise. So where both the typologies and the issues related to terrorist financing and the mechanisms that you can use to analyze data for those purposes are disparate and sit in separate segments and are sometimes too far apart in an organization. Bringing those skill sets together and, in fact, having some assets that can bridge that gap is extremely critical to the effective deployment of data analytics.
Great. Thank you very much, Brandon. Insightful as ever. Brandon, while I have you on, I think there's another question here that falls squarely in your bailiwick, and it is how can institutions identify potential terrorist activity when a terrorist organization may use a form of cryptocurrency, for example, Bitcoin, which may then be layered back into the legitimate financial institution. Would you mind answering that question?
Of course, yes. And this is a challenge that we're going to increasingly face. I think as of last count, there were something like 650 or 700 cryptocurrencies that were in the mainstream market, and the market has grown to billions of dollars in size. So it's something that has been quite pressing for all of our clients. I think the issue that arises is that traditional institution-to-institution ledger sharing and traditional payment reference and information sharing has become less informative when dealing with some of these alternative currencies, alternative payment providers. And so what this demands of an institution is to actually refocus on the entity that they are dealing with that is exchanging in cryptocurrency. And as many people on the phone know, and as you know, Summer, one of the things we also run into is this layering of different virtual currency wallets prior to actually executing in the regulated financial services market. And so both of those force us to realign and to focus on KYC, documentation methodologies, strategies, process, and detail, and to move away from this sort of ledger-focused system. And so what I've seen customers do is to focus more on a higher level of diligence when it comes to organizations and entities dealing in cryptocurrencies, and doing more diligence on things like source of funds, which is an interim solution until blockchain in and of itself becomes a tool within AML. Because as everyone is aware, blockchain has the capability to transform AML and payment processing through trusted networks that have been vet, by multiple parties. So I see cryptocurrencies as a problem. I see an interim solution. I see potentially the underlying elements of cryptocurrencies potentially being a part of that solution in the future.
Yeah, agreed, Brandon. Thank you very much. I'm going to stay on the topic of digital currencies. There's another question here that is, somebody's asked, are there any clear real-world examples of terrorists using digital currencies? And then are there any statistics of terrorist funding through online social networks? And I'm going to pass the baton over to Vlad, if that's okay, Vlad?
Sure, absolutely. So there has been evidence of terrorist organizations using cryptocurrencies and virtual currencies. I think there was a report in 2015 of an ISIS-linked cell in Indonesia using Bitcoin, I believe, to transfer funds. That was kind of the first concrete report of a terror network doing this. Most of the other reports have been anecdotal, if you like. So we know that these terror cells are looking at innovative ways to move money. We know that, as Brandon mentioned, the Bitcoin marketplace is worth billions now, and we know that they're opaque, so therefore they lend themselves to these clandestine networks. The problem is with getting statistics and definitively saying that they are actually being used for this purpose is that they are opaque. So it's very difficult to find out if and when somebody is using Bitcoin for bad uses. Unfortunately, statistics are therefore hard to come by. What we can do is look at customers who are transacting on Bitcoin exchanges, because those are finite in amount. Most of them are registered, legitimate, and you can separate the legitimate ones from the dark web exchanges, if you like. And a high volume of unexplained Bitcoin transactions with a Bitcoin exchange should warrant some further questions from your customer.
Great, thank you, Vlad. And have you anything to offer in terms of the last bit of that question around statistics of terrorist funding through sort of social networks?
Again, I think this is, as with all of these emerging technologies, it's very difficult to get a one-source statistic for these. There's Facebook, Instagram, Twitter. It's very difficult to get information across all of those, and a lot of these platforms, rightfully so, offer privacy settings that can be used by these individuals and networks to protect themselves. So unfortunately, the answer is it's very difficult to get those statistics.
I mean, I can add to that. There was an interesting case, I think it was in Virginia, where a teen was charged for providing material support to ISIS by using Twitter to instruct on how to use Bitcoin. So there are cases where social media and virtual currencies have been used to at least potentially finance terrorism. Yeah. However, I think this is something that's spoken about quite a lot as an emerging trend. But it is shocking how much, just the normal cash-based money transfer mechanisms are used for terrorist financing. Cash is still accepted in most places, and it still tends to be the number one method for financing terrorism.
Great, thank you both very much. So I'm going to move on to another question that's come in, and I'm just going to read it out. It is it possible for financial institutions to share intelligence among themselves to reduce potential money laundering and terrorist activities? I'm going to ask Dana if you could take that question, please.
It's a good question, and there has been a recent trend to do just this. I'll speak from the UK example. So the Joint Money Laundering Steering Group has been set up. So GMLIT in the UK was set up to do this. It had a trial period, and there was quite a bit of success around sharing particular names and typologies within the banking community. It's something that we've seen a lot too with individuals who are involved in the fraud world. If any of you have been involved in that space, it is quite common practice for banks and financial institutions to share at a minimum typologies so that it's understood what types of fraud are occurring, so that you can assess how vulnerable you are. And that is something that has been happening through industry. We've seen, banks and financial institutions identify particular typologies and share that with both law enforcement and through law enforcement with each other. So it is something that we're seeing and something that I expect will continue to occur.
And just add one more thing to that from the U.S. perspective. I mean, this is something, this information sharing area is something that's been happening across banks in the U.S. for quite some time. In fact, I know that over the last, I think it's 15 years, there have been several hundred terrorism and terrorist financing cases that have been brought as a result of information sharing driven by FinCEN. So it's something that absolutely is within the boundary lines of things that financial services institutions are doing, and it is something where we're seeing collaboration drive results.
Great, thanks, Brandon, and thanks, Dana. So I just doing a time check. We have another question here. As a financial institution, how would you know a customer traveled to a high-risk country? All a financial institution would see is a purchase made from an airline, but not necessarily the details of the transactions with the airline. So that's a really good question. And Vlad, I'll ask you to take that.
Absolutely, no problem. So as I was saying in the scenario that we had, the purchase of these airline tickets is in itself not necessarily a high risk red flag. It's an important factor to consider in layering up the risk profile of your customer. So if you have flights to an airline which flies to high risk jurisdictions, you may also have accompanying that transactions in that jurisdiction. Those taken together with other high risk activity in the client's data footprint should trigger some further investigation. So it's not the ticket purchase itself or a specific airline itself. It's more using that data point in combination with other data points to paint a fuller picture of the customer's risk profile.
Yes, absolutely. Thank you very much, Vlad. Okay, another question here, and I'm gonna field this to Brandon, if I may. Brandon, the question is, can you elaborate on data footprint? And I'm assuming that the person who posed the question just wants to understand maybe the types of data or what we mean by that term.
Absolutely. So, but by data footprint, I mean that more and more terrorist activity involves some form of electronic communication, and we're seeing enhanced monitoring of those communications via social media sites, via alternative platforms. So we're seeing more and more terrorist activity that involves communications that are electronic in nature. We're seeing transactions, as I had mentioned in that one case. Much of the transaction activity or buying activity had occurred online. We're also seeing other new forms of data, such as video links and audio links and other kinds of interactive media that are being posted online or posted to electronic mediums like dark websites that are identifying potentially problematic activity. And this is where the information sharing across law enforcement and financial services institutions becomes critical, because some of those pieces of data are not available to the financial institution. However, if there is information sharing, you could identify particular account holders or particular customers that may be linked to some of these potential activities. And this is something that law enforcement has been flagging over the last 5 years as one of the key results of their post-mortem analysis, is that if there was more linkage to these different data points, they could have actually prevented some of these more heinous attacks.
Great, thank you very much, Brandon. Now, just doing a time check, we've actually reached the end of time in our session. So thank you very much for your questions. If you do have any further questions, you'll find our contact details for all of the presenters today in the slide pack. So do feel free to contact us.